Data-driven insights for serious traders. As the closing bell approaches, momentum is analyzed, tomorrow's key price levels highlighted, and the setups that matter most broken down. This is Trading the Close with Verified Investing.
Hello, everybody. My name is Drew Dosick, and welcome to Trading the Close. Guys, today the markets were somewhat muted. We didn't have any sort of ripping rallies going on broadly. We had just mainly sideways movement, a little bit of a pullback in some of the indices, except for the Dow Jones making another new all-time high and closing at all-time highs. So guys, let's get into it. Let's check out the market summary board and see where everything is panning out. We've got the Dow Jones down, or pardon me, up 0.69%. Nasdaq down 0.28%. S&P 500 flat on the day. U.S. oil down 4.29%. We're going to get into the reasons why here in just a few moments. Gold continues pushing up 1.69%. And Bitcoin resumed pressure, folks, getting down near that $100,000 mark, almost looking like it's going to break it once again. All right, so let's jump into the S&P 500 heat map. And we see here we've got NVIDIA flat on the day. Microsoft up almost 0.5%. Google down 1.48%. Meta continues to be under pressure. We're going to take a look at that stock here in a little bit, as well as Oracle, which Oracle could be coming in to some very long-term support level, at least for a near-term bounce. Palantir down 3.42%. Amazon down 1.95%. Tesla down 2.02%. AVGO up almost 1%. AMD up 9.1%. Huge push on that, but not a new all-time high for it. And as we see, rest of the board is really just kind of mixed. That's kind of what we get with a moderate day in the markets. All right, so let's get into the S&P 500. Yesterday, we were talking about how this area, this candle did confirm above. That made the top end of this parallel support. And look what price did today. You can see with this wick, price came down, kissed the top of this parallel, and bounced up to finish on the day, basically flat on the day. You would want to see, if you're a bull, you would want to see an accelerated continued move, get separation from that parallel. Has not yet happened. We'll see where price action takes us tomorrow, but we do have a gap fill up here on the spiders at 687.33. That will be some resistance should we continue pushing up higher, obviously, than the all-time highs. But this is a moderate day, so it's not implying anything, whether up or down, moving for the next day. Next up, the Qs. The Qs were a little bit weaker than S&P 500, as you see, down 0.17%, mainly just consolidating at the moment. We're consolidating with these three candles, just like we did with these two candles before we did decline. So we did put in a nice reversal candle here, propelling us back up to consolidate in this range. But basically from the last week, nothing's really changed. We're all just still hanging out right here on the Qs. Next up, the SMH. Now, the SMH did buck the trend. Yesterday, it was weaker. Now, today, it's stronger. Now, mainly, that's because of AMD, right? AMD, we look at that chart just real quick. I know we've looked at it several times. We've had a nice push up here on AMD. Did not get to the all-time highs. Did not even fill this gap up here at the all-time highs. But still, nonetheless, a great move up, getting above this parallel channel. We'll see where price takes us in the near future. Now, back to the SMH. We go here and we can notice here that with this move, we're still just chopping around with these three candles, very similar to what the spiders are doing with the previous consolidation area. Again, not giving us much inclination as to where the next move is going to be when we're just consolidating in this erratic manner. Next up, the IWM. As you see here, the IWM down 0.31% today. Similar story, consolidating right here after a nice push up on the support of $237.33. Should we continue pushing higher? The top or the bottom of this parallel will be that resistance, currently right around $251.15. Now let's check out the Dow Jones Industrial Average here, and we can notice here too another new all-time high close. Yesterday we had another all-time high close. Even though the price actually got higher on these three candles, we actually closed at a high, another close at the high. But guys, look at this longer term trend line. All right. For anybody that knows technical analysis, guys, this is stuff that's amazing. And now this is happening potentially another time on the Dow Jones. And you may say, well, what do you mean, Drew? Well, I'm talking about this inclining trend line. Show how it broke here. Price went up, retested the trend line, got rejected. Now we're making another attempt. Normally, whenever we have a scenario like this where we break a trend line, retest the trend line, the stock and or index collapses and starts coming down. That shows that there's relative strength here on the Dow Jones, at least for the near term. We'll watch and see how that price reacts tomorrow, potentially tagging this inclining trend line. Tomorrow, that price is at 48,594 points. Next up, we've got Bitcoin. Guys, Bitcoin, look at this. We talked about the rejection that we faced yesterday when price ran up into this inclining parallel channel. Boom, got rejected, and it did so enough to pull price down underneath this declining trend line. Notice where price action is now headed for the end of the day. Right here near where all the other candles closed. That's not that good of a sign for Bitcoin, unless, of course, we can get back above this trend line and then ultimately get into this parallel channel. But this big move down, rejection here with trying to get back in, this is all telling me this is bearish consolidation, likely coming down at least to $97,658. And that may not be the near-term bottom, folks, especially with all this bearish price action here on Bitcoin. Next up, now another chart that's seeing success. We see gold here. Look at gold. I was talking about that yesterday. The next area of resistance will be the underside of these candles, these pivots that you see on the chart. And that's exactly where we are right now, basically at $4,200. That will be the resistance. Followed by that is going to be the all-time highs up here at $4,381. Those are the next two resistance lines. Support is now solidly on this inclining trend line at $4,091. Now, another strong chart, one that's even stronger. Remember this image and these chart patterns on gold, because look at silver. It's higher, folks. Look at the strength there in silver. Just took a little pause right here underneath these pivots and then just continued to rip higher. That tells me there's going to be resistance here, basically at $54.56, followed by $56.28, which is the middle area of this longer term inclining parallel channel. You see, I've zoomed back out to the weekly time frame on silver, and that's going to be another significant resistance level on silver. Notice that's all obviously above these previous highs here in May of 2011. So very interesting price action on silver, especially with the strength. It looks like it's going to continue higher, folks. So nice push there on silver. Now, next up, we've got oil. Now, oil, as you know here, did drop 4.28% today. And a lot of the reasons for this is because the supply forecast for OPEC and the EIA. OPEC revised its outlook to predict balanced supply and demand in 2026, while the EIA forecasted rising global inventories and lower prices, with the potential Brent expected average to go to $55 next year. So will that go there straight away? No, it won't. We're going to come down currently into minor support right now. Next support's going to be right here on the top of these candles, right around $57.50. And then that $55 level is down here basically at the pivot low that occurred in April. So that could be the marching orders, at least for the near to mid-term on U.S. oil. Yesterday, we were showing a little bit of bullish consolidation with a nice re-attack of this declining trend line. Today, that price action changed. You can see how quickly patterns change on charts that give us insight as to which direction things are going. Whenever you have a big red candle or a big green candle, you got to pay attention to those, because those will likely dictate price action in the near term. Next up, Nat Gas. Guys, Nat Gas, this surprised me. I was anticipating Nat Gas to not re-attack this resistance at $4.70 today, rather come back down, at least hang out near this $4.45 level. But Nat Gas had other plans, went up, tagged $4.70 again, closing the day at $4.65. If this momentum continues, folks, we're going to be pushing up here to $4.92. But I remind you, we are overbought on the relative strength index down at the bottom of the screen. That does imply we should at least consolidate for an extended period, work out that overbought scenario, and then continue marching higher. Very much how stair steps look. You move up, move sideways, move up, move sideways. We haven't had that sideways move. Rather, we've been just inclining, moving up on that chart. So we need some sort of consolidation for this bullish momentum to continue. Otherwise, we'll see a sharp reversal in price action. So we'll see where price takes us tomorrow. All right, next up on ON. It had earnings today. Now, guys, check this out. This is really cool. Let's get into some technical analysis. Let's get into how we draw trend lines, how we find resistance levels. I took a day trade on this. We had a great day in the live day trading room today, but I could have taken 2 or 3 day trades. It just happened so fast. I was only able to get one of them off on. Should have put on those sneakers. Apparently, I needed some extra speed today, but check this out. So, all right. When you're presented with this, a gap up, moving up over 20% today, too, by the way. It didn't close there. It was down here at closing at 17.99% on earnings. Great beat, by the way, 65% on earnings per share. Revenue 4.12%. But what it did, folks, is it increased guidance, too. A lot of retailers, or at least apparel companies, are not doing that. So ONON did it, increased guidance, and yet the stock still sold off once it did open. Why did it do that? Couple reasons. Check this out, and it becomes very clear and it illuminates. Notice all of these pivots right here that occurred in the end of August. If I just draw a trend line right here, draw it straight across, notice how that the price action today pierced that level and then got rejected. That was one of the reasons. Now, we like to take 2 factors whenever we're making trades here in verified investing. We need to find another factor, another reason why I need to take this trade. Notice I've connected the trend line right here to this isolated pivot point back in June of 2025. If I draw that trend line over to this pivot point here in September 23rd of 2025, look what happens. I got an X marks the spot right here. Great for a day trade. Rejected price. Not only did it reject it here, it pushed price back down underneath this long-term trend line drawn all the way back from December of 2022. Notice when price plunged underneath it, before it did it, it consolidated right on the top. That also is a signal that we teach. When you're consolidating on a trend line, price likely drops off of that support level. It did that. Earnings propelled it right back up, but we didn't close above that trend line. In the near term, ON will have to beat this trend line. Let me delete one of these and these so you can see it a little bit better. That area is at $42.80 tomorrow. If we get back above there and establish ourselves above that trend line, we could be marching up to $51.02. That's the next significant major resistance level on the chart of ON, implying potential upside of nearly $10. Now, another stock that did not have upside today is actually Meta. Meta dropped $18, down 2.88%, closing at $609.01. You can see here the support at $600.38 is still valid, even though we did kiss it on the 7th of November. Price action still is starting to come down and test this area. Should we come through and break, then Meta is going to be going to the bottom of this longer term inclining parallel channel that you see strung out from the end of 2023, connected over to the major pivot that we had here in April of this year. You can see that derives right there, roughly around the $550 mark on the chart. Of course, if we get a little bounce and meander in this area, that value will increase. So should we hit this in January, we're going to be talking around $565 on the chart there for Meta. Next up, we've got Rivian. Now, Rivian, as you see here, there's a couple different things going on. We've got an inclining parallel channel. Yesterday's price action, as you see right here, did break above the 50% level. So great, good thing for it. Check it off the list. However, we're a little bit overbought in the near term on the RSI. You can see price action today really jockeyed to fight and get back above this 50% area as we did open here, plunge down underneath, and then we just rocketed right back up to close the day here. If you're bull on Rivian, you want to see price action maintain above this 50% area of the parallel. That's roughly $16.81. Now, we'll find the next levels, and we'll also show you, too, with more technical analysis right here. I love doing this on the charts because whenever, if you're not aware of technical analysis and you see these lines on the chart, it may seem easy, right? But if you don't have the lines and then once you draw them, it really illuminates what's going on the chart. So check this out. So we've got a pivot in January of this year. And if I string that over to this next pivot, you can see why price stopped where it did. we have a beautiful inclining trend line that now was tagged 3 times. So right now, that's the most immediate resistance at $17.95. If we do break through that, you know where we're going? Not straight up to the top of the parallel. We're likely coming over here to this pivot back from July of 2024, which isn't much further past. It's here at $18.86. Those are the resistance levels moving up higher. Should we beat that? Then that clears the door for a larger move up to the top end of this inclining parallel channel. Really neat stuff, especially when you can really compartmentalize the levels and then determine if price beats this level, then we're going here. And if that gets beaten, then we're going all the way up here. It helps you as a trader understand what's going on with your trade. That way you can take profits if we get rejected here, maybe leave half on the table, see if we get another returning bounce, and then play it for another higher move on the charts. Next up, we've got Oracle. Now look at this, guys. Oracle, what a nasty decline. Was all the way up here at $346, now down here at $226, nearly 34% down since the last earnings report, giving it all back on the charts. And so now I want to show you another trend line that I found that could provide some near-term support and much needed support. Also, let me direct your attention down here to the bottom of the screen. RSI now down under 30. Anything under 30, oversold in the near term. All right, so check this out, folks. If I find this pivot all the way back here from December of 2021, and I string this pivot out right on top of the pivots that occurred in November of 2024. Look what happens when you string this trend line out. Not only did we isolate these pivots, that showed us that this area was resistance when price first moved up. When it broke out, what happens to price when it breaks out of a trend line? It likes to go back and tag that trend line. And that's exactly what this long-term trend line did. Now notice how close price is right now on an oversold near-term scenario. This is looking like a very, very solid level of support. Not much further under today's price. This trend line or this price action today in the candle did not touch this trend line. It actually kissed it, got a little bit away from it, but then ended up closing the day right down near the lows of the day. This trend line is at $225.80. Be watching price action tomorrow. If we gap over it, that could accelerate selling down to $205.52. But this should be a great area for a bounce with a minimum target, I would say, up here to around $247. That could pocket you almost 10% on just this technical decline with a real quick pop, and then sell it and then wait for a price to come retest this trend line. Interesting price action there on Oracle. Last up, we've got a viewer request on XPEV. Now, XPEV does have earnings that are going to be released on Monday, so be mindful of that. Earnings can really manipulate current momentum on a stock. And we see here too, we are butting up against overbought territory on the RSI. Anything over 70 is overbought on the daily. We're currently at 65.87. But you see here, we've got an inclining parallel channel on the chart with price very close to tagging the top at $28.56. Couple things to note here. We've got a declining trend line where price is recently broken above and confirmed. So if we have bad earnings on XPEV, the first area of support is going to be right here on this trend line, $25.10. Should we beat on earnings, be watching the top end of this parallel, right around $27.31, followed by $29.11. But breaking out above that parallel would be a significant thing for XPEV, as this parallel has held price down ever since back here in August of 2023. All right, guys, that wraps up Trading the Close. Don't forget, next week on Monday, we start showing this live at 4:20 in the afternoon. In addition, don't forget to like and subscribe and send this out to your friends. That way they too can start learning technical analysis, the beauty of it, and how it works on the charts day in and day out. All right, folks, can't wait to do this again tomorrow. Until then, I'll see you guys on the charts. Have a fantastic day, folks.